But among the stocks that we're focusing on today, United Breweries is in focus on the back of their fourth quarter numbers. In fact, I spoke with Vivek Gupta, who's the MD and CEO of the company, to figure out, what sort of demand environment is the company facing right now and what kind of volume growth can they post in this year along with margins.
As you mentioned, we had 11% volume growth, 21% net sales growth. Our premium volume grew 21%. And we believe we also grew market share all over India. So we are very pleased with the result. I think there's a lot of opportunity in the beer category. Our focus is on consistently building our capabilities and our growth plans for not only for this quarter or next quarter, it is for the years to come. So we feel there is large potential. Will the 11% or 21% will continue? I think it will be difficult to say because there are disruptions this quarter, specifically due to elections. As you know, in many places you have dry days and there are restrictions. But I feel that our momentum is there. For last 3 quarters, we are growing 7%, 8%, and 11% respectively. So we would like to continue the momentum.
All right. Election disruption aside, let's talk about a couple of factors. You said, one, you gained market share across the country. Secondly, momentum is there. So can you break that up for us? What does your market share currently stand at? What's your target for the next year? And as far as the momentum is concerned, what rate is the industry likely to grow at in the first quarter? And for the year, what's your target?
Yeah, so when I say momentum is on, last 3 quarters we have grown 7%, 8%, and 11% on volume. And last 2 quarters we have actually grown 14% and 21% on value. So there is definitely a momentum on there. Our market share is close to 50%. In fact, our data suggests we actually gained almost 130 basis points of market share quarter on quarter this quarter. Our focus at UB is to actually drive category growth. We are less worried about growing market share, but actually more about growing market. So the focus is that we know the category should grow at least a high single digit. And that means we should slightly grow higher than the category to maintain the market leadership.
All right, high single digit is the category, then probably you would be a little over double digit. So that's what the street would read from what you're saying, Vivek. But, with all of this, what we need to know about is the operational performance as well. Barley prices have now come off. There is some stability expected. You are looking to increase your proportion of returned bottles as well. All of that so far is not reflecting in your gross margins or EBITDA as much as the street would have liked to. Would you like to give us some guidance for gross margins and EBITDA margins for the next year?
Yeah, I think in this quarter, we actually grew our gross margins 300 basis points versus the same quarter a year ago. We are actually investing in the category growth in our business. This quarter was full of innovations. We launched Queenfisher. We launched, our draft beer in Heineken. We expanded our Ultra Max offering in other states. So we also launched London Pilsner in Karnataka. So we are actually investing in innovation. And as you know that when you invest in innovation, you have to actually put more new bottles. At the same time, our advertising and promotion spends to drive the category growth has also increased. So we are actually investing in our business. We are building long-term capabilities. We will see sequential improvement in margins, but we will continue to invest back to actually drive category growth and actually, build our market share as well as.
So if I could ask you specifically, for 3 numbers then. One, what would be the amount that you would spend on ads and, promotion? Roughly, it's been around 5%. Secondly, what would be the targeted proportion of returned bottles in your overall scheme of things? And thirdly, when you say sequential improvement in margins, when do we see you go back to that double-digit margin?
See, I think, as you know, that's advertising and promotions, it's your competitive plan based on the innovation. But I can only say that we will be sufficiently investing to ensure that our products reach in the outlets which sell, and there is an awareness of the product to do that. On the return bottle, we actually expect improvements in the next quarter. We have made some operational changes. We expect this number to be closer to, at least the new bottle immersion should be less than 30% in our business. And on the sequential margin, as I said, that this, we are looking at, margin improvement quarter on quarter versus a year ago, but we'll continue to invest in the business. Our focus is on driving top line growth, revenue growth, and getting our business structurally right. What I mean by that is launching innovation, getting a portfolio right, making sure we're making capital investment in the breweries so that we have a long-term proposition. So those are the things we are focusing on. It's very difficult to give an outlook, but I would say we want to make sequential progress.
All right, sequential progress is something that the street would keep an eye out on. Then let's talk about the portfolio itself. The last time you said, the premium category is about 20% of the overall market. What's your portfolio mix like right now? And with all these new innovations that you're bringing about, what is it likely to be going forward?
See, our premium business is still less than 20% of our portfolio. But as I said, that this quarter we grew 21% volume growth, and we definitely grew market share in the premium portfolio. We will continue to expand. We have the opportunity to expand our international brands like Heineken Silver in the country. At the same time, we have the best domestic premium brands like Ultra Max, Kingfisher Premium. We are also expanding a portfolio by state. This business is state-by-state business. So when we talk portfolio expansion, it is not only about launching new brands in the country, it is also about exposing brands which are already there in some other states, but not in a particular state. So for example, in Odisha, we actually started having our cans on Ultra and Ultra Max this year. We launched, as I mentioned, London Pilsner in case of Karnataka. So we will continue to fill the gaps in the portfolio in various states, but also start bringing new brands. So we expect our premium business to continue to perform strongly, like what happened this quarter.
So could you give us a sense, currently, what proportion of your revenue comes in from premium? Where does that go given its pace of growth? And Heineken, you spoke about, contributes sub 4% of your revenue, but you've actually added a lot more in terms of offerings here. So where does that number go by the end of this year?
See, on Heineken, we are actually planning to expand our manufacturing footprint. We already have a manufacturing facility in Karnataka, which hopefully after elections, we may get the approval to start our production. Once we get the approval, then we will be able to serve consumers in Karnataka and more of south of India with Heineken as well. Our goal is to continue to drive category growth, and we expect our premium share, which is currently less than 20, to actually start hitting more close to 25 in next 2 to 3 years.
You were hoping for some announcement to come by in Maharashtra in the first quarter of FY25. Assuming that things are silent till the elections, perhaps thereafter, could you hear something?
We continue to engage with the government, and we know the association continues to engage with the government. As you mentioned, we are waiting for elections to come, but we got very, very positive engagement with the government. But again, the real action is when they're going to review it. They put a committee to review the taxation, and I'm very optimistic that probably post-elections, we may see some progress from the government.
Let me put you on the spot here before we let you go, Vivek. For the next year, if we had to divide it into two halves, can the first half be high single digit in terms of volume growth, second half low teens, overall taking your volume growth to about 10% for the year, and margins at some point during the year will hit the double-digit mark?
Look, I think, as I said, we are aiming for high single-digit growth, but we need to continuously build the category and build the fundamentals on this, and we have to sequentially improve our margins. So I would say that it's a long-term game. It's not a short-term quarter-on-quarter game. We will continue to invest in our brands, our people, our organization, our breweries, and whatever is needed, because this is a very capital-intensive business. So the choices we make on this business are not to just deliver short-term results, but it is also to deliver results for 27, 28, 29, because the investment we make today, they will start giving fruits after 2 to 3 years. So, I can only say that I feel that there is a lot of potential in the category. I feel we are on the right track. We are very happy with the progress. Our board yesterday announced dividend for our shareholders of ₹10, which is an increase versus last year. So we will like to continue to make this solid progress.
All right, that's the management of United Breweries. In the past quarter, volume growth was good. Margins were a bit of a disappointment. Going ahead, they're saying that they'll continue to outgrow the industry, as well as they expect to see some kind of margin improvement. Stock down 2% for now.